Hey, everybody, happy Thursday. It is showtime. And I just shut my slides. That's not very clever. Hold on a second. There we are. I hit a button I never hit before. So let's go. Let's talk about what everybody keeps asking. Is the bottom in, or should I wait for $12,000? Somehow that $12,000 number is sticking in everybody's head. And we're just going to show some on-chain data that proves maybe capitulation's already behind us. And maybe we have identified a max floor. So let's just jump in. And as usual, this is edutainment. Now we're going to start with, as usual, the good, the bad, and the ugly. The good, whatever section has the most amount of good news, we start with. And some stuff is almost on the fence. So first of all, regarding good news, you could argue, depending if you like altcoins or if you're a Bitcoin maxi. If you're a Bitcoin maxi, you won't like this, because Bitcoin dominance remains weak so far. We're hanging around 42, 43%, which is quite low considering what people thought. And it shows you that some of the alts are really rallying as we go forward. First piece. Second piece, we're going to start jumping into a lot of on-chain data here. I want to shout out a big thank you to the real PlanC. His link will be below for his Twitter. And him and I worked a bit together on a few different exhibits to try and find out if the bottom is in, looking at on-chain data. So the first chart that we're going to look at today is the Delta Oscillator. It's the 7-day exponential moving average of the Delta price, which is the realized price, less the average price, which basically is the cost basis of the whole network, minus the lifetime moving average. So you can see here all the historic points where we fell into this yellow box back in 2011, back in 2015, back in 2017, 2018. And here we are again today. Note we didn't hit it in March 2020, but we're here and we're turning up and out of this oscillator. So that, number one, is a positive sign. But what else do we have? First of all, this is confirmation that again, from PlanC, thank you so much, from the proof that the short-term holder capitulation is behind us. It was the max short-term holder shakeout, as I call it. And this is also borne out by the next slide. But here, the important thing to know about this slide is we had record short-term holder capitulation levels in the history of Bitcoin. Never before have so many given up. So that is another positive sign. Third is capitulation behind us. Yes, but now we just have Fed fear. This is the all-time high realized losses. Again, bigger than March 2020 and 2019 and 2018, etc., etc. And Bitcoin has the denominated realized losses over a 10-day window is now down 70% from where it was at this level during the capitulation time. So the question is, are there any more shoes to drop? Yes, perhaps, maybe a little Mount Gox hit, etc., but nothing like what we've seen. Most of the badness is shaken out. Now, this next slide is basically the HODL waves. And here you can see the 1-year plus hodlers are at an all-time high. That is, if you zoom in, you'll see from the yellow area and above, it is an all-time high. And everybody above yellow is 1 year plus. So that green area and above. Now, the other thing to note here is at the very, very bottom, you will see all the old short-term holders have been flushed out, and now it is the arrival of new entrants. You know, people have just been in literally a couple of days or a couple of weeks, and that's what typically happens. So welcome to all the new hodlers, who may be one day long-term hodlers, but we'll see. The market is, again, choppy and sideways. So the next slide is super interesting. Again, from PlanC, reminding me of Willy Woo's cumulative value days destroyed, CVDD, not to be confused with the other C19 CVD stuff. But does this mean out from here? Not necessarily. But if you look at this CVDD line, it is the golden line. We got close to it in previous capitulation bottoms, 2015, 2018, 2019. March 2020 and right now, but we're not close. Now, according to this golden line, if we are to hit this max floor, which we got close to a few times in the past, the price of Bitcoin would be about 14,500. Does that mean we hit it? I don't know. So I asked PlanC, what would the price be if we took that line and modified it to be able to hit in the past? And PlanC graciously created this for me that we're sharing with you guys today. Never seen before in the history of the world. This is the CVDD model tweaked with a little ratio of about 112% factor. And that will bring the new max floor price to about $16,240. Now, remember, we got to 17.5, so it's about $1,200 off that level already. The question is, could we hit this? Yes. Would it be unusual? Yes. Would it be historic? Yes. Should people wait for 12,000? No, I don't think so. So that's kind of the message here today, because a lot of people are just holding out, sitting on the sidelines, and they're not deploying. So let's jump a little bit further as well. Let's look at a whale map here. This is kind of fascinating to look at the realized price by address cohort. And here you see those with between 10 and 100 Bitcoin. They are the winners in this market. That means they got in and held, and their realized price of all the cohorts is the lowest at 12,800, with, of course, the exception of Satoshi's stash. He wins the game there. But excluding that, that would be the winner. Now, the whales are interestingly worse off. I don't know if you can zoom in to see that, but their average realized price is about 28,461. And those with less than 1 Bitcoin, their average is about 24,300. And those, again, as I mentioned, 10 to 100 Bitcoin, they are in profit and they aren't selling. The rest will have to wait for a Bitcoin price to rebound to about 24,000 before they get there. By the way, Bitcoin just went up $140. It has been very weak. Again, we have that dark cloud of the Fed hanging over us. Until that is gone, we won't go up again. But again, good time to use the chop. Now, back to some stable coins. I touch on this a lot. When folks move into stable coins, it's like risk off. But this is interesting. I share this every single week. We see here as well, the people have moved back into stable coins. Once again, that is the blue line rising, and the yellow line going down is basically indicative of the Bitcoin amount. Again, these two are inversely correlated. And another way to view this is this chart here. This is Bitcoin versus USDT dominance. We talked about dominance at the beginning, and this is from Trader Tardigrade. And basically it talks about the inverse correlation between USDT, which is Tether, and Bitcoin. Remember, though, it's important to bear in mind that Tether has lost a lot of market share to USDC as it becomes more dominant. So either way, let's see. But historically, when this happens, it's a good time for Bitcoin to move up. So are we at the bottom? Again, tons of indicators look like we definitely are. Now let's talk about money flow and see what's going on in the world. And this time we are going to actually focus on what's going on in the world and around the world. So here, this is the digital asset inflow from James Butterfield. And here we saw, actually unusually, if you remember last week, I said, I think they had about 12 million or 14 million flowing in last week. Well, they had a major correction, and the actual amount was about 343 million, making it the largest single week of inflows since November 2021. And I don't know if you guys remember November 2021, but that was the time when the market peaked, hit an all-time high, and then tanked. Not saying that that's going to happen again, but the fact that this huge money flow is coming in, and it's the largest money flow in quite a long time, is also an extremely bullish sign. If the market entrants weren't ready, they wouldn't have deployed. They are deploying. They deployed hard last year. So another good sign. Now let's break it out and see where the money is going. Bitcoin tuck in last week 19 million, Ethereum 8.1 million, and the month to date inflow for Ethereum is 137 million. Remember, year-to-date outflow is still 315, but they're crawling their way back. So money is beginning to flow back into Ethereum, and that's a very, very good bottom indicator as well. And we've seen the price action. I always say, watch the money. People say, oh, no, it doesn't make any sense. But really, it does. Because when you saw, I think it was 4 weeks ago now to the day, that the money started flowing back into Ethereum. Since then, the price has gone up almost vertical. So that's why we look at this stuff. The other thing, let me see, short Bitcoin 0.6, Solana 1.8, month to date 2.4, year to date 112.6, nearly about the same as the short Bitcoin fund. Cardano 1.4 as well, money coming into Cardano and some other names too. I guess the money coming into Cardano is because the Vassal hard fork, a lot of bullishness and big expectations around that. So we'll see what happens. Historically though, it was a kind of a buy the rumor, sell the news type of thing. So fingers crossed it is a good launch for that hard fork. Now let's talk about money flows by country. I've never shown this before, but and I rarely talk about this, but this flow has been bonkers. If you look at all the numbers here, you see week flows of 16 million in Switzerland compared to just 9 million in the US and 8 million in Germany. Remember, Switzerland's a very small country, but a very wealthy country. And that was kind of stunning to see. But look at the month to date inflow, 355.6 million, and year to date, nearly 600 million, more than all the other countries in the world combined. Which is kind of staggering. If you net them all out, Switzerland has pumped in nearly 200 million more than all the other countries combined. Net positive flow. And I think that is staggering. So what's going on with Switzerland? What do they know that we don't know? Well, let's talk about this. Now, I did a video a couple of months back, I can't remember. I looked at the high net worth migrations across the world, moving out of certain countries into certain countries. But if you look here, you can see the big migrations are out of places like Russia, China, India, Hong Kong, Ukraine, and they're moving into places like Switzerland, Israel, Singapore, Australia, and UAE, which also may be related to the fact that Switzerland is a very crypto-friendly place and, of course, a beautiful country. A little bit biased as well because I live there as well. But let's talk about this too. So you think crypto is not real? Well, copper is incorporated in Switzerland and has offices all around the world, like Singapore, Dubai, Zurich, of course, headquarters. And they are a crypto custody firm backed by Target Global. And I think Alan Howard is one of Copper's prominent investors. But Barclays are looking to invest $3 billion into Copper because they believe crypto custody is very, very important going forward. Again, Barclays, big traditional bank, pumping a lot of money into crypto custody. And guess what else is happening soon? Fidelity is going to offer Bitcoin as an option in retirement accounts, 401ks and stuff. So again, the pennies are dropping. They're dropping fast. Yes, we are in the middle of a vicious crypto winter, but it looks like we're coming out and the money is still flowing in. Now, another ETH news as well. Since the beginning of July, the balance of ETH on centralized exchanges has fallen from 21.7 million to about 20.6 million. The net outflows is about 1.1 million in a pretty short window of time. And many, of course, are going to cold storage, etc. And a lot of people are also talking about a supply crunch. And once the proof of stake merge happens, Ethereum could become deflationary, which will drive up price as well. And I think that's why we're seeing a lot of the big money flowing in as well. The other thing to note about this is the ETH to Bitcoin ratio is also where it was at 0.05 on the 2nd of May after a big pump, but it's kind of come back down to earth again, but it's probably going to take another run. And I believe ETH will run faster than Bitcoin over time. So in other alt news as well, you guys heard me with CTO Larson again a few months back. We both violently agreed that if a chain has over 1,000 validators, it is sufficiently decentralized. So here you can see Solana and Avalanche on top of Cardano and Ethereum all have more than 1,000 validators. This is from the Ultimate. Big thank you to Sanjay for sharing with me. But I thought that was an interesting chart. You can see Polkadot 297, Cosmos 175, Near 100, Matic 98, Phantom 71, 21 on Binance Smart Chain. That is nowhere near enough to be decentralized. And obviously the race is on. And I think Solana's adding about 3 validators a day at this clip, which means they'll be above 2,000 very shortly. So watch that space. Now, next, this was interesting too. I recently published a minor evaluation, my July edition, early July, a couple of weeks ago. And almost at the same time, Arcane published theirs. But what was interesting to me after the fact is their choices were different to mine, but they came out with this Redux just today and on their blog post, and they were talking about the quality of Bitcoin mining companies. I think their original study, Argo and Riot Blockchain, came out as winners, and they were nowhere near the top of my list, but they complemented their study by analyzing the miners using a very simple ratio, which I think is very good too, which is the enterprise value divided by EBITDA. And lower than 10 is considered undervalued. And here you can see that their winners are Stronghold number one. Note, I did not analyze Stronghold because I didn't have enough financial information. But CleanSpark and HUD8 come in as number two and number three, being the cheapest value miners out there. Now, the place where we do agree as well is Marathon Mining. And I said that was the most at risk based on all the miners that I analyzed. And it looks like per this ratio, they are the most expensive. So this was very comforting to see. And who knows, maybe instead of me analyzing 30 different ratios, I can just look at EV over EBITDA as a simple evaluation method. But I think there's many other factors to consider as well, like how much Bitcoin they hodl, et cetera, going forward. So let's talk about the elephant in the room, Jerome Powell. As I say, he's boxed in, he's stuck, he's painted into a corner. After taking a club to the economy, everything is screeching to a halt. And now there is a 75% chance of a 75 basis point hike coming real soon. That will be tomorrow. And this has gradually gotten stronger and stronger. There was about a 35% chance of a 100 basis point increase a week or so ago, but that has withered away because it's now looking highly unlikely. Again, if we get 75 basis points, markets will rally. If we get 100, they could tank a little bit. So watch that space carefully. Now let's talk about a little bit of Tesla news too. Despite the zero C19 policy, Tesla is still growing in China. Again, these are just some Chinese statistics from Q1 and Q2. The green is 2022 numbers, the blue is 2020, and orange is 2021. And you can see the trajectory still remains very, very strong. And I believe Q3 will be even stronger, barring any unforeseen additional lockdowns too, which would not be good. Now, a little bit of bad news. Not much, so buckle in, everybody. Fear and greed is back. It tipped down again. It briefly hit 34 last week, if you recall. And there was a great recovery in the crypto market, a lot of increased optimism amongst investors. And since then, the index has fallen and is barely hanging above extreme fear. So as a quick reminder, everybody, I threw on this chart as well. I hope the Arcane team don't mind. 0 to 24 is extreme fear. 25 to 49 is fear. And we are just one into that fear category. So we'll take that as a little win. Therefore, it's only bad news. 50 to 74 is greed, and 75 to 100 is extreme greed, and that's where you need to start lightening your bags, ladies and gentlemen. This is why we look at this, and this is a really, really good indicator of what's happening in the market. Now, let's talk about some ugly news. There is a lot of this, and much of it is macro-related. First of all, as we've been saying, we are in a recession, and what happens in a recession? Well, unemployment goes up. People lose their jobs, and now we see initial claims for unemployment benefits in the United States on the rise, and it's going to start getting more and more abrupt. That big spike you see in the past is, again, March 2020, the date that will live in infamy, as they say. Now, let's talk about other screeching to a halt. Manufacturing has stalled, and the service sector's rebound from the C19 pandemic has disappeared into reverse, and the tailwind of pent-up demand has been overcome by the rising costs of living, higher interest rates, growing gloom about the economy, lack of consumer confidence, yada, yada, yada. You get the idea. Everything has actually ground to a halt rapidly. And this is back to levels we have not seen, barring, again, March 2020, which must be the third time I've mentioned that date, since 2009. This is not good, ladies and gentlemen. And this is the PMI. Also, nosediving, composite output index. You can see here, again, on the way down. There is a global recession coming. Eurozone manufacturing data are nosediving as well. The forward-looking orders are in the toilet. Inventories metrics are sky high. Nobody's able to sell stuff. And data for the US are heading in the same direction. So the global economy is clearly going into recession, ladies and gentlemen. Sorry to end on that bad note. but there's a worse one. This is European Union gas prices. You can see they have now soared to over 200 euros per megawatt hour equivalent right now. This is the highest level since March 2022, and we know what happened on that date too. So again, nothing but doom and gloom, and obviously Mr. Putin is behind this by cutting off the pipe, and the whole world is surprised. Why would they be surprised? It's kind of ridiculous. Anyway, I'm not going to get into that. With that, everybody, hope you learned a lot. Again, a lot of good news, a lot of bottom news. Despite all that has happened, Bitcoin is still incredibly resilient, despite everything that's been thrown at it, the whole contagion within the cryptoverse. It is still strong, it is still stable, and I firmly believe the worst is behind us. If you're waiting for $12,000 Bitcoin, do not hold your breath, everybody. That's medical advice, because that may not be a good strategy. Again, I could be proven wrong, but I think it's highly unlikely. So thank you all for being out there. Thank you to the audience. Thank you to the mods. Everybody helps out in this community. Love you all. I'll see you all tomorrow.